Good evening. Welcome to the experience sharing session hosted by DBA Alumni of University of Kelaniya, where we bring together corporate leaders, industrialists, and academia to discuss about the current affairs, status of the economy, and to forge a way forward. Today, we have our very own Dr. Sanka Jayampathi, who is a graduate of the DBA program with a specialization in brand management. And also, he has over 25 years of experience in the banking and finance world. He is currently the general manager for Assetline Finance. Dr. Sanka, thank you for taking our invitation.
Thank you, Chanuka. Thank you very much for inviting me for this occasion, and it is a great honor to me. Thank you.
Dr. Sanka, pleasure is all mine. So, first of all, could you briefly share your journey from DBA in University of Kelaniya to being a general manager of one of the largest finance companies in the country?
Yeah, Chanuka. I began my professional and academic journey at the University of Kelaniya, where I completed my BCom Special Honours degree and then later MBA. With this strong foundation, I pursued my Doctor of Business Administration at the same university with special focusing on strategic management and business management and brand management. Alongside my academic path, I gained more than 25 years of experience in the finance industry, finance sector, with expertise knowledge in marketing, recovery, channel management, and branch operations. With the blend of both academic rigor and practical hands-on industry exposure, paved the way for my current position as a general manager.
Dr. Sanka, so how the DBA program has shaped your leadership approach to excel in the finance field?
Yeah, it's a very interesting question, Chanuka. First of all, let me take you through the finance industry. In Sri Lanka, there are 32 finance companies, more than 1,000 of touch points, and more than 100,000 of employees. It's a very competitive market. The retaining the business is a very difficult task, and getting the business is very difficult. And the DBA experience to sharpen my leadership style, especially it strengthened my ability to make evidence-based thinking pattern and long-term decision making. And it taught me to view challenges not only from the operational perspective, but also the the research lens. So most important is I refined my reflective leadership style, leading with clarity and purpose, which keeping customers and stakeholders at the heart of my every decision.
All right. So now moving to our main core area, which is the SME sector. So Dr. Sanka, from your perspective, what is the current status of the SME sector in the country?
Current state, in a simple word, is the backbone of our Sri Lankan economy. You know, Chanuka, as it accounts for more than 75% in total number of enterprises and 45% of workforce, and near 52% of contribution to GDP. So it's the backbone of the Sri Lankan economy, and also more opportunities, provide more opportunities to entrepreneurs and young participants in the economy to develop the country. And the challenges they face is a few challenges they are facing in Sri Lanka. It's not a few, but there are more challenges. But mainly I can mention for 3 challenges, such as limited access in to finance, inadequate infrastructure, and needs for digital transformation. In this obstacle hinder their ability to scale of compete effective in the global market.
So, Dr. Sanka, the World Bank and IFC has identified that there is about a $15 billion credit demand in the market. But unfortunately, only about 3 billion US dollars has been fulfilled by the formal finance sector. So, which means there is almost a 13 billion credit gap which exists in the market. So, as a general manager in one of the largest finance companies, what are the obstacles that you see SMEs face when it comes to obtaining a loan from a formal financial institute?
Yes, Chanuka, SME often face big challenges when trying to get finance. Many do not have proper financial records or collaterals, which makes banks too reluctant to give loans. And even when the loans are available, the interest rate is very high, and the loan application process is very long, and it's complicated. On the top of that, most SME owners have limited knowledge of financial management, making it harder to prepare documents like business plan or cash flow statement that banks need to grant loan. So these issues make it difficult for SMEs get the money they need to grow working capital or new investments.
So, from your experience, what are the most suitable product or services which has been made available to SMEs in Sri Lanka?
In Sri Lanka, there are a lot of products, Shanuka. Especially, I would say that working capital loans to bridge the day-to-day cash flow requirements, and leasing and hire purchase for vehicles, equipment and machineries, and invoicing finance to get quick cash from pending bills, and digital banking and payments, insurance, export and trade finance, advisory services. This is a very important thing, advisory services, because a lot of SME do not have sufficient knowledge on the financial products. So this advisory service is a very good one, and it can guide us to manage their money and growth, Chanuka. And if you want to experience few example on those products, I can give you the two example. If you take the invention finance, in a small textile manufacturer, they have to wait 60 days for the customer payment. For using invoicing finance, Chanuka, they got immediate cash, which allow them to buy new materials in bulk, and they can take the large orders. So this will cause to improve their profitability in 30%, near to 25-30% within 6-month period of time. And if you take a digital lending for a retail SME, take small grocery chain, right? If they use the digital lending platform that assess their sales and transaction data instead of traditional collaterals, and they will receive the quick loan by using those details, and they can renovate their store, and they can stock new products. So it will help them to improve the customer traffic and improve the profit also.
So, Dr. Sanka, now taking a little bit of a different question from you, how does the finance sector manage credit risk while achieving sustainable growth for the industry?
Yes, Chanuka, it's all about the smarter risk assessment, looking at the cash flow, digital transactions, and repayment behavior rather than looking on the traditional collaterals. And diversification across the sector and credit guarantee schemes also help. If you take SME, though, they not have lengthy credit histories and documents in them. So finance company must build a credit evaluation model to blend the sectorial dynamics, cash flow projections, and understand the business model. So this will help to those sectors to get the finance and mitigate the risk from the both sectors. And also finance company can introduce the step up lease, step down lease, bulk payment lease. So according to the business model, they can transformation their leasing payment method. And also, I would say the insurance must be there, linked with insurance, credit guarantee schemes to mitigate any risk that may identified in the sector. So those behaviors, those actions can be mitigate the risk both sectors, finance and the SME sector.
So, Dr. Sanka, now moving back to SMEs, if I ask from you with your 25 years of experience in the finance sector, what are the three biggest mistakes that SMEs do when it comes to accessing to finance from a financial institute?
Yes, Chanuka, from my experience, the most common financial mistakes the SME sectors made is poor record keeping and lack of financial documents, which limits to their ability to understand the cash flow and access the financial funding and formal credit. And the other one is over-reliance on informal borrowings. It's often interest rate is very high, and instead of and the building relationship of the traditional bank and the finance is so too far if they trend with the more on the over-reliance and the informal borrowings. And the main and common mistakes the Sri Lankan context SME sectors are made in, according to my knowledge, mixing personal and business financing. So it makes it difficult to track profitability and plan for the long-term growth to have a superior performance.
Dr. Sanka, as a academic and also as a industry veteran, what advice that you give to SMEs in the country to gain access to formal financing from the financial institutions?
You mean the financial discipline?
Yes.
Okay. According to my knowledge, Chanuk, separate the business from the personal accounts. That is the main thing, as I mentioned earlier. And maintain the proper budgets, track cash flow daily or periodically, build emergency reserves. That will help them to get the cash on the pandemic situation or put it to the SME, the enterprise development, and use digital tools to monitor performances, setting financial goals and reviewing them regularly. That also will create the stronger discipline of their sector.
Dr. Sankum, based on your perspective, what are the upcoming trends and technologies which might be helpful in solving this SME credit gap?
Yes, Chanuk. Today, new financial trends are making life much easier to the SME sector. Things like digital lending, AI credit scoring, crowdfunding, green finance, and digital tools. These kind of trends make it much easier to the SME sector's life, their operations. If you take an example, I think you are very expertise on this. The government has introduced digital platform like GoPay. So this will help to streamline the public services payment, thereby reducing transaction cost and promoting cashless economy.
Dr. Sankar, good that you mentioned about GovPay. Now, there is a lot of discussion among academics as well as in the government about this digital transformation. So, my question is that can digitalization transform SME credit access?
Yes, Chanuka, digital transfer make it much easier for SME to access finance by reducing paperwork and speed up loan approvals and offer inferior credit assessments through AI and alternative data. And it also provide simple tools to tracking expenses, managing cash flows, and make proper records, which make SME more attractive to lenders.
Dr. Sankar, so the current government as well as the previous governments have discussed and made considerable policies to work with the and for the SMEs in the country. And at the same time, both yourself and myself have also done great number of research about the SME sector. And also, financial institutes also have a very renewed and a strong interest towards the SME sector in the country. So in your humble opinion, what benefit will a collaboration between the state and the banking sector and the academia will have on the SME sector of the country?
Okay, Chanuka, the collaboration between those three institutions is vital for SME development as each brings unique strength to the table. If you take the financial institution, they provide capital, innovative products, and most of that necessary support. In terms of the government, it ensures the enabling environment through policies, incentives, and credit guarantees. In the side of academia, I think they contribute research, as you know, training and capital building. When these efforts come together, they are a very strong ecosystem that improves the SME access to finance, knowledge, and opportunities. And also it ultimately driven sustainable growth and competitive in the business market.
Dr. Sanka, so as of your final question, if you have to give one piece of advice for our young entrepreneurs who's looking to gain access from the formal financial institution, what will it be?
Yes, Chanuka, for young entrepreneurs, yes, it would be to build the strong habits of discipline and resilience, both personally and professionally. On the personal level, I advise manage your money wisely, invest in continuous education, and always keep personal and business separate. Okay. In the business side, make the priority on track cash flow periodically, closely, maintain proper records, and plan growth with a long-term mindset rather than looking for the short-term objective, short-term gain. Challenges and obstacles are normal in the SME sector, Chanuka, you know very well. But with the financial discipline, resilience, and clear vision, you can not only survive in the market, but also you can sustainable business in the long-term period of time, Chanuka.
That concludes our experience sharing sessions for the day. We will get back to you with another member on next month. But for today, I would like to respectfully thank Dr. Sanka for taking his time and for sharing his valuable thoughts about the current state of affairs and also about the SME and the finance sector of the country. Sanka, thank you so much.
Thank you,
I hope to see
Chanuka.
you again.
Thank you. Yeah. Thank you.